Hello everyone. In today's video, we are going to look at this breaking news from Farfetch that the Farfetch CEO is currently talking to some of their biggest shareholders to discuss some options to buy their public shares back. So what they are trying to do right now is that they plan to delist themselves from the stock market. And there are a lot of speculation of why he tries to do this. And like one of the reasons is that they basically want to reconstruct the company because the company is currently not profiting 6 quarters straight, and he wished to buy back the public share so that he can do some reconstruction without the speculating eye from the public. So how do Farfetch getting into the situation today? Because if I remind you, since 2 years ago, they already lost 90% of their stock value. So some words about Farfetch in case you are not that familiar. Farfetch is an online e-commerce restyling website. They are established in UK, a lot of revenue through their overseas network and overseas websites. So they are aiming to sell this luxury product like handbag, shoes, and all kinds of stuff to rich people basically. And their slogan is like technology meets fashion. So it's like a concept kind of thing. So according to plan, that's at the beginning of this week, that Farfetch should already release their Q3 financial reports, but they just refuse to do so. And the most reasonable speculation is that this Q3 revenue is not as good as expected. And we can actually look at the latest financial report, which is 2023 Q2 report. Actually, the most interesting part of that report is not shown in the public webinar. So there is like this online video session where the CEO explained this numbers and figure to the public. Like the most interesting data is in the appendix. You have to really scroll all the way down to find the number. So this margin shows that for the last 6 quarters straight that they don't have a positive number. So all the margin are negative, indicating that the Farfetch business model is not profiting at all. This is not too surprising because in the history, what does Farfetch did is tell a good story to the investors to get some money and use that money to expand, to grow fast. So basically, they have a very good GMV number and like the market share of the channels and all kinds of stuff. They are like expanding. Their organic growth rate is really, really fast because they are burning the investors' money. However, during the meantime, they are not at all profitable because their business model is not mature enough, to be honest. And this e-commerce about plus luxury is not that like rewarding. So I'm a previous employee of Mytheresa. Mytheresa is also an online e-commerce luxury website. We operate similarly. I still remember when I was in Mytheresa, Farfetch is one of our biggest competitors. So their application, their iOS app, rank about the 5th in the Chinese market, and our app rank about 21st. And interesting enough that we met this kind of similar problem. So it's like 2 years ago, if you look at this stock curve of these two companies that I just mentioned, you see that this at around the beginning of 2021, this luxury brand plus e-commerce are systematically overvalued. They are overpriced. And just look at what happened after 2021, right? They share a very similar trend. It's basically they are consistently losing their stock value. So why is like 2021 so special? So I mean, there could be two reasons. First reason is that it's just after 2019, right? So it's like there are very aggressive financial boosting plan from the government. This leads to a lot of hot money going to the stock market, and they have to invest on somewhere. And at that time, this e-commerce plus technology kind of thing really sells well, I guess. And the second is that people estimate there can be a kind of recovery from the corona, and due to this lockdown policy is being relieved, and people have more. People just have this urge, to shop expensive items, which turned out is not what the word is happening if we look back from now. And actually, this is what's mentioned in the Farfetch webinar, is that they're saying that the Chinese market is not recovered as far as expected. Yeah, I mean, there are lots of reasons around that. Right now, like they are talking to their biggest shareholders, including Alibaba. So I also want to mention about Alibaba because so as of today, there is this company called Temu. You may heard about it. It's another e-commerce e-commerce website from China that they aim to provide low price, okay-ish quality product. So today their stock value are almost the same, right? So I think it's a kind of historical moment because if we look at Alibaba, 2 years before, and if you look at Temu 2 years ago, nobody can foresee that today something like this happens. And I think there are a very deeper reasoning behind this, basically because it's also because people's expectations, right? So Temu's logic is that people will become poor. That's why they need to buy cheaper product with okayish quality. At the same time, Alibaba thinks people will become rich. That's why they try to build up their brand. They want to get rid of the impression of the cheap stuff and start to provide some good quality items, which turn out to be wrong, right? So when you do your business, right, you are a business owner. You need to know that your personal efforts need to be alongside of what is the history trend, right? You should not go against it, because sometimes people's effort, like people's wish or people's hard work is very, is powerless in front of a historical trend. So I'm definitely going to talk more about this kind of behavior in my next videos. So how do you like Farfetch? Have you ever heard of it before today's video, and do you see it coming? Do you believe that this kind of model of getting money from investors and make your market share expand and then show your organic growth rate to the investor again and get more money and repeat this process? Because this is basically what is happening 2 years ago. And right now people look at profitability and stuff. Yeah, so what do you think about it? Please comment in this video below, and I'd like to hear your feedback. And once again, my name is Xiaolu. I'm an expert in making business decisions using data-driven solutions. We see each other next time. Bye-bye.